Good morning and good afternoon wherever you are in the world. My name is Jon De Wet from Vesper Capital, coming to you from a pretty rainy day, summer's day here in Melbourne actually. It's given me a great opportunity to get back and get all the admin and reporting done for our incubator fund. Today we're going to be talking about Psyquation and Michael Berman and Vladimir Kruglov, who have an amazing startup that have really helped us in these early stages of our fund. Uh, and I believe it can help other fund managers, but also particularly retail traders who may be suffering from the typical retail trader cycle, where they're going through all the behavioral biases, blowing up accounts, etc., etc. It really is an application that can be used across so many different areas. And I'm very lucky to have met Mike and Vlad, um, both online and for Mike in person, because I think they have really cut the learning curve for us building a fund-to-fund model. On that, who are Vesper Capital? Well, myself, my business partner Lucas, and a whole range of partners that we've brought on board have essentially been working very hard to build a fund-of-fund model in the FX space. What's a fund-of-fund model? Well, a fund-of-fund is essentially taking some of the world's best alternative money managers, bringing them in, ensuring they're diversified, their results spread across what we call a time horizon to essentially increase the risk-adjusted returns. So increasing the returns, decreasing the drawdown, in theory. But at the moment, we're trading as an incubator fund, and for this very reason, you want to test these concepts live and really ensure you're building out a fantastic product. But Lucas and I are very excited, and we're super passionate to have begun building this a few years back, and actually seeing it come to fruition now in an incubator fund is super cool. So let's talk about Psyquation. What is Psyquation? Well, Psyquation is a robo trading coach. Okay, there are both quantitative and qualitative errors, for lack of a better word, or behavioral kind of indicators and triggers that humans, as well as humans who create machines, all right, actually display when they're trading in the markets. It doesn't really matter what asset class you're trading, but for many retail traders who are in FX, Psyquation is at the moment aimed at that asset class. Mike does say they're looking at broadening out over time, but I think Forex is the perfect kind of vehicle to use a tool like this, just given the sheer amount of retail traders that are in the space. Uh, it looks at both qualitative and quantitative triggers. We'll have a good look at the moment, but it gives you both live and historical feedback on how you're trading. Okay, whether that's algorithmic, discretionary, fundamental, systematic, whatever your trading style, this really does help. And from our context here in Vesper Capital, I mean, from a fund model, it has been absolutely invaluable. So hopefully by the end of the webinar today, we can give you a bit of an idea of how Psyquation works, how it can help you, how it's helped us as a fund, but also how us as a fund have actually brought it into our workflow and our daily reconciliation of teams, and how we've used it to actually vet these teams and ensure that we're not going to blow up any accounts or take on too much risk given the current market environment. Just a quick little bit of background. This is Michael Berman. Mike's got a PhD in behavioral finance, which is really gold in any trading arena. Interestingly, from my personal movements, I was an FX trader for a few years as a discretionary trader, traded on a desk up in Sydney for a while, and these behavioral biases were one of my biggest challenges. And my personal account's also hooked up through Psyquation now. It's been incredibly helpful. Vlad is on the development side. Vlad's got a PhD in mathematics. You may have heard of Vlad through a range of other kind of entrepreneurial pursuits in the FX space, but he's an incredible developer when it comes to numbers and quantitative analysis of people's kind of trading statements and behaviors from the quant side. He's absolutely amazing. Both Vlad and Mike were involved in Rapper, which is a very interesting model that essentially was used as an algorithmic measure of talent in the trading space. Rapper ended up being acquired by Fundseeder, which you may have heard of. Also part owned by Jack Schwager, one of the heroes in the trading space. But these guys are big ballers, and for the retail traders out there, it would really, really pay you well to have a look at Psyquation and see how it can help you. But just to jump in, I'm going to give you a little overview on how it's helped us as a fund. So our fund-to-fund model, okay, many of you will be aware of kind of my FX book. I might just give you a quick overview here. Essentially, we've got 8 trading teams. Okay, these guys have been vetted with the help of Psyquation and the guys there, and have also then been placed in the live conditions, okay, through managed accounts, where we can actually track their progress and see if there are any alerts given our volatility goals. As you can see, we've had some kind of mixed results. At the moment, the fund's looking pretty good, right? We've had to drop a couple of traders that were highly correlated to others. We brought on a few others that were showing really, really good, solid risk-adjusted returns. That's the advantage of having an incubator fund, right? But how do you actually take 8 trading teams like this and assess, how they're building into the portfolio historically, and then taking those hypothetical historical portfolio results and actually building them into what we use in the live testing environment. So this is where Psyquation comes in. I'm just going to bring up our master account here. So as an incubated fund, this is our AUM. We're happy to kind of share this. In the scheme of funds, it's not a hell of a lot. In the scheme of the retail trading world, it is. So I guess we're in that that middle ground where we're trying to prove our concept with kind of larger trading sizes and ensuring the scalability and the variance is all there. Now, just to give you a little overview of how we actually use this, okay? What Psyquation will do is take all our live and historical trading results, okay, and it will aggregate them into a Psyquation score. Now, this is a proprietary score that Mike and Vlad developed. It gives you a really, really, I shouldn't say guarantee, but a strong indicator of whether the skill is random or whether the skill is actually repeatable. Okay, what does that mean? Well, if we've got a trading team that may have returned, 100% in the last 6 months, looks great. They may have even had a very small amount of drawdown, but their style of trading from a quantitative and qualitative point of view will determine whether that skill is actually repeatable. Now, our fund at the moment has a score of 71, which is actually pretty good given we've got 8 funds in there, all trading and generating various forms of alpha and beta. We are hoping to kind of increase this to 85, 86, which will give us a much better place to actually launch the fund, put us in a better place to launch the fund in April. But we're really happy with the score at the moment. The stats give you, all the kind of basic hedge fund stats, from Sharpe ratios to annualized returns to our monthly returns. So we're not looking too bad there. We had a blockbuster month in July. Mind you, our AUM was much less. But now we're kind of trading our full incubator assets under management. We're starting to see a low leverage form of return profile, which is what we're looking for at the moment. Now, when we talk about the live environment, okay, this is very similar to what some of the other aggregators will do. But what we then do is say, right, in the live environment, this is the past month. What is our equity and what is our value at risk? Now, the equity includes all open trades across all our trading teams, okay? So at the moment, our equity from day one is up at 19.3%, okay? It is a little skewed, I'll be honest there, because in the very beginning, we had quite an aggressive team and a lower assets under management. So they had a bumper month where they returned close to kind of 16, 17%. But in any event, okay, whether this was 3% or 19%, what it does give you is a value at risk of all open positions. Now, value at risk is, it's a hedge. It's essentially a hedge fund risk metric that tells you with all open positions, given the volatility of each of those assets. Okay, so each of those currency pairs in this case, over the last, I believe it's last month to 2 months is the metric, is the time horizon that they use. Um, if we had the maximum move of that historical volatility, what's our current risk? Now, our portfolio currently doesn't even have a 1% value at risk, which is great to see, okay? Because if you have any crazy massive slippage on stop losses, you know that even with the maximum volatility run, we really only have a percent at risk at the moment. Now, if that moved down to 14, 15%, then we would be starting to look at, right, what are some of our individual teams doing? So let's go into some of the individual teams as an example. Um, we'll just look at the top one here, Base. Now, Base is, these guys are super cool. They kind of trade after fundamental data, and they'll take various positions, always have stop losses. They go in a little harder than some of our other teams, but they're highly diversified. They're up 10% since August, with really very little comparative drawdowns. So their risk-adjusted return is looking fantastic at the moment. No open positions, okay? But if we were to look at their history, okay, and say, well, how have they been trading over this period? We can scroll down here and see some of the alerts. Now, many of these alerts, they will come through live, okay, and you can actually have them alert you as you're trading, letting you know if there's anything going on. Now, as you can see down here, this was a few months ago, which we managed to stamp out, but it was giving us martingale alerts, okay? Huge danger in trading. If you're a retail trader, you really don't want to be doubling up on positions. It's the equivalent of going in on the roulette table and betting on red, and if it doesn't come up, doubling and doubling again and doubling again until you've either got no bank left or you're back at break even. Not a sustainable strategy. Yet many strategies actually do pursue this form of trading because it looks good on the equity curve. But let me tell you, I've been in this game a while now, and Mike and Vlad will agree, martingale and grid are dangerous. Okay, there is always an inevitable end, and it is never pretty. It's generally the blow up of the account. So this lets you know if the trading system is behaving in a way that is not congruent with your overall goals. Value at risk, good segue, okay? Value at risk, this is telling us that they are either risking too much or too little based on our fund goals or our trading goals. What are our goals? So when you set up with Psyquation, you click up here, and you can set your goal metrics, okay, performance metrics. Now, this is quite an aggressive team. So we've got one hell of a goal here, and one that probably won't be hit, but we wanted to set it high to actually really test the robustness of our sizing, our position sizing. We're actually expecting more like a 22% drawdown, but given the annualized performance figures here, we wanted to measure how our leverage was measuring up against maximum drawdown. So in short, basically we've gone aggressive here. That's why we're getting the alerts. But what we've said is our goal is close to kind of 45% annualized performance. Sorry, our goal is 55% annualized performance, and currently we're sitting, the way we are tracking at the moment, we're heading for 44% with an 11% drawdown. Is that guaranteed? Absolutely not. But if we continue to trade in this way and manage risk in this way, this is actually possible. Okay. Now, not all our teams are going for such aggressive metrics. As you can see, a 4-to-1 risk to reward by year end on drawdown is quite a tough task. But some of our teams in the fund-to-fund model, we can go for this and be a little more aggressive because it's smoothed out by the volatility in our other teams. Let's bring up a trading team that has some current results, some current open trades. linty. These guys have some trades going on. Okay, so this is Lintic, right? They're quite an interesting team in terms of the way they trade. They actually take baskets, low leverage baskets of currencies that are quite heavily based on what the what the commitment of traders reports are saying, and it will position essentially to try and catch the smart money. Now, it's one of the few teams that don't trade with stop losses because their leverage is so low and they use this always in the market strategy. Um, they don't the stops will actually decimate the system. Now, that being said, how important is our VAR in a strategy like this? Incredibly, and we use this daily and also use the alert system daily to kind of figure out whether the team is displaying any quantitative or qualitative alerts that that may require us to leverage them, or double check whether the algorithms are running correctly, or even look at our execution at the brokerage. Okay, perhaps they're having to take on too much risk because our broker execution is not working too well, but it gives us an initial trigger before the event. And this is where Psyquation has been really fantastic for us. So many people in the particularly the FX space will wait until the blow up and then try and figure out what happened. Psyquation is actually going to give us these leverage behavior alerts, okay, and tell us that we're unlikely to achieve our goals or remain within our drawdown threshold if we continue to behave in this way. And I hand it to you guys, Mike and Vlad. You really have built a stellar product here, and we're getting a lot out of it at the moment. Just to give you a little bit of an overview of how we use this in a kind of live environment. Alongside, sorry guys, just let me pull this up here. Here it is. Okay, we use it alongside Metastock. Okay, now Psyquation is going to give us historical data on how the trading strategy fares in terms of skill, okay, and risk, and repeatable strategy, how repeatable it is. It gives us alerts in the live environment, okay, in terms of our VAR, whether there are any leverage behaviors that are occurring. But what it can't foresee at the moment is events. Okay, so I'm a macro trader. I look at these macro events that are on the horizon. Is Trump talking tonight? Is Janet Yellen, is there an interest rate decision in the Fed later? What's going on with Brexit and sterling? These are all kind of risk events that very well could blow VAR out the water. So what we do is our team uses Metastock Zenith, okay, which is essentially a news and charting system, but it's so much more than that. If you know the Reuters terminal or Bloomberg terminal that professional traders use, that generally cost about $4,000 a month, this is a retail version of that, which essentially has all the functionality that's available for retail traders and allows them to really leverage the kind of news flow that some of the big institutions will have. I use it for my personal trading. I've been using it for our fund model as well in the incubation phase, but as we grow, we'll eventually have to use a Reuters terminal, really, given the terms and conditions. But for retail traders, guys, if you don't have this, I tell you what, go get it. It's brilliant. So what do we do? Okay, I wake up in the morning. The first thing I do is look at Psyquation, look at our overall portfolio VAR, see how the teams have performed overnight, see if there's any risky behavior that I need to touch base on them with. Then we look at what the majors have been doing overnight. So you can see there's a bit of US dollar weakness coming to the new year. Sterling's been taking a beating with the kind of uncertainty around Brexit. And Euro, we're in a kind of ranging environment. Just trying to figure out what the next move for Euro is. I think we've got some interesting cot positioning and some backwards and forwards flows from some of the larger equity funds that's keeping this at bay, but I think we're ready for a breakout either side. But this gives me a good snapshot of what's happening. I then look at the news. Okay, what's been going on? December exports fall more than expected. So China's on the way back down. Asia shares slipped, dollar on track for a losing week. Okay, so we're still looking at a little bit of risk off, but combined with fundamental lower valuations on the dollar. Right, so right now I'm getting a real macro snapshot of what's going to be affecting all our fund trading strategies. We can look at what the equity movements were doing overnight, okay? And then I'll come to my main screen here, which is essentially the extension of the real-time and historical risk we use with Psyquation, and it'll let me look at the forecasted macro risk. Okay, so this is the real-time economic releases coming out of particularly the G7 Eurozone and Swiss currencies, including the US, which sits in the G7 and all the majors. So later on tonight, we've got some stuff coming out of the US. Okay, the Purchasing Price Index, retail sales. Got US business inventories, Michigan consumer sentiment. Okay, this will very well be a mover, as well as retail sales, but there's been quite a focus on the Michigan sentiment lately, so let's see what they're expecting. So this Reuters poll tells us they're expecting the the sentiment to come in at 98.5, and the economists are looking at, okay, 98.4, the standard deviation of 1. So if we get outside of 99.5 or 97.5, that could lead to the next move in the US dollar, particularly if we do get some moves with retail sales and these all line up. So again, I'm using this as a kind of indicator of where price could be heading and where the macro events are. Now, this combined with Psyquation, absolutely gold. So 12:30 and 2 a.m. my time, local time, I'll be looking particularly at Verve, okay, who are quite one of our teams that are quite US dollar heavy. They've had a stellar performance this year, actually. Whoa, coming up on over the last 6 months, really only 10% drawdown and coming up to 14.2% total performance now. And I expect that to kind of continue over the year. They're an awesome team. They do trade quite US dollar heavy in terms of the pairs. They're square at the moment, so we'll see if they have any open positions later on when that data is coming out. And we'll see what the total VAR is, okay, with the team itself. See how that compares to the VAR on the portfolio as a whole. And then we can make leverage decisions and figure out whether we can increase or decrease leverage, reduce some positions, talk to the teams about their strategy over these events. So guys, yeah, look, I hope that has given you a little bit of insight into how we use it. This is the basic version. We do use it for some more detailed stuff with Mike and Vlad, but in terms of our fund model and how it could potentially help you as a retail trader, I think you can see the links. It was developed for the retail market. You know, their philosophy around it was, let's develop a program that will knock behavioral biases and quantitative dangerous trading strategies on the head before they occur. And they're certainly doing it for our trading teams. They're doing it for us as a fund as a whole, and really bringing us closer to our goal of being a $100 million fund of fund over the next 3 years. So thank you, Mike and Vlad. If you want any more information, flick them an email or sign up to Psyquation. As a retail trader, it is free to use, guys. If your broker is listed here, it's free to use. If it is not listed here, flick Mike or Vlad an email through Psyquation, and they can see if they can get your broker on board. I will say that, you know, the payment actually comes from the broker itself, so the broker will actually pay them a very small volume fee, comparative to the value that they give for bringing on clients and trading accounts. It's great for the brokers because it's creating longer term traders. They're not going to blow up accounts and leave. It's great for the retail traders themselves because they're making more money more regularly and not blowing up accounts. And it's great for Psyquation because they get to fulfill their purpose, which is helping traders and funds manage risk in a more sustainable way. So I hope that gave you a little bit of background and our feedback and function on how we use Psyquation. If you have any more questions, please fire us an email, jon@vesper.capital, or fire Mike and Vlad an email through Psyquation, or simply hook up your trading accounts. Good luck, be safe out there, and talk to you soon.